let's talk about our call of the day now, and Rahel Solomon's going to join us with that. Hi, Rahel.
Hi, Scott. And that call would be on Salesforce, getting a new price target of $235 at Jefferies as they maintain their buy rating. So this is a $15 raise from the previous target and one of the highest on the street for CRM. So analysts at Jefferies point out that the stock is attractively valued. They expect sustainable growth driven by strong enterprise adoption and also some larger deals in the pipeline. And Scott, it's a name that the street is extremely bullish on. There's only one sell rating, with 88% of analysts who cover this stock recommending it as a buy or a hold. The average price target also $206.73. So Salesforce also on Mizuho's list of its favorite stocks right now, along with CrowdStrike and Palo Alto Networks. They point out that while new business remains challenged, their software checks have been positive with some indications of improvement. Mizuho also pointing out that software continues to be an outperformer year to date. We have seen that to be true for sure with other big cloud names like Zscaler, Cloudflare, and Coupa Software, all of which are up more than 100% in 2020. Scott, we should say that Salesforce reports next Tuesday, August 25th. So watch those numbers.
We will. Rahel, you stay with me. It's interesting, Jim. No one here owns Salesforce, which, like this much favored name, you hear everybody raving about it. Rahel brings us our call of the day on it, and yet nobody owns it. Joe, why not?
Well, software and security are defensive in their nature. Back to the Home Depot and Best Buy and Target conversation. It's the same type of mentality. Why don't I own it? Because I don't have room in the portfolio right now. I have been in other places. I would be in Palo Alto Networks. I think it's important to understand security moving forward is going to be something that IT spending is not going to be pulling back on anytime soon. I would own Salesforce over owning CrowdStrike. I think Salesforce has more of a dominant market share in their particular space. So I look at all of these names collectively, and I view them as defensive in nature when thinking about technology, because you're always asking yourself a pullback in spending. Yeah. Where is corporations going to take the money from? And it's not going to be.
Why don't you own them?
I don't have room in the portfolio.
You keep saying I would.
I don't have room in the... Because I said that, Scott. I don't have room in the portfolio unless you want to send me a nice big loan where I could expand the amount of holdings in my portfolio. I just don't have room for them. I have 29 holdings. That's my max. I'm at it. I can't think of what I would be taking out of the portfolio to add something in like this. There's many names that you could look at that you could say, I would like to own it right now, but just don't have room for it.
Yeah, it's a shame that you don't, because look at those performers. Rahel, right? That goes along with some of these calls. They're just getting on top of some of these movers, Rahel. Yeah, 240% for CrowdStrike, Zscaler 270.
Certainly outperformers, Scott, as you mentioned. But to Joe's point, to just put a fine point to that, Mizuho also saying that Palo Alto Networks is one of their strongest picks among their favorite, saying that it possesses the strongest array of cloud assets among firewall-centric vendors in our view. So again, saying it's one of their favorite names amongst that group. But Scott, if Joe doesn't have room, he doesn't have room.
When you only have 29 names, believe me, he finds room for when he really likes something. He finds a room. It's not like he does nothing, Rahel. I mean, come on. Joe, next week, Joe will tell us I bought something else. All right. Jenny, you own Palo Alto.
Got to sell something first.
All right. So I think Joe brings up a really good point of not having the room, which is you need to maintain a discipline and have a tidy portfolio with disciplined processes that put the different stocks into the portfolio. And on Palo Alto Networks, what we look for there, this is in our growth portfolio, is a very high free cash flow yield. So that to us is our first hurdle. Palo Alto is fairly priced, high free cash flow, high growth, and in a space that we think actually, when we were talking about long-term unaffected with Home Depot and companies like this, we think Palo Alto is long-term benefited by what's gone on, and that trend could sustain for a long time as people do actually permanently work from home. Even if you work from home one day a week, you're going to need to have higher security at both the corporate and home level, and we think Palo Alto benefits from that.
All right, watching that stock move up. Rahel,